Having moved to Canada recently, I landed a six-figure job, saved more than 70% of my income, and invested more than $20,000 in the market. Along the way, I've noticed mistakes that most people make here, and in this video, I'd like to talk about how you can avoid these to set yourself up for a rich future. Let's get into it. Number one, buying things on the buy now, pay later schemes or EMIs. Canada is no doubt a capitalistic economy where people are given easy loans, credit, etc. with zero down payment options or zero APR and whatnot. So it's no surprise when immigrants fall prey to these tactics and purchase an iPhone or gadgets or even a car soon after moving to Canada just because it's so easy to do so. But that's a slippery slope that could set you up for failure. I have 3 rules when it comes to this that has helped me a ton. Rule number 1, I don't buy things that I can't outright buy twice in cash. For example, if I had to buy an iPhone which costs say $1,000, I wouldn't buy it if I didn't have $2,000 in my bank account to spend specifically on this. Rule number 2, I wait for a bit before making a purchase to see if I actually need it or not. We are all guilty of impulse buying, and one way to check if I really need something is to give it some time and see whether I can make do without it or not. And most times the answer is no, I don't need it. Rule number 3, I don't buy anything on a buy now pay later scheme unless it's absolutely necessary. So in the same iPhone example, I'll only make the purchase once I know that my current phone has issues or that it isn't working for me. These rules ensure that I have enough money to cover my purchases while also not buying for heck's sake. Number 2, not using a credit card enough. I haven't used my debit card since the time I opened my bank accounts here, and I've already accumulated enough points for 2 return flight tickets to India. How? Well, I use my credit card for all my expenses wherever possible. You not only build a strong credit score, but also reap the benefits that come with using a credit card like perks and points that help you travel and get things for free. Considering we live in a capitalistic economy, I cannot stress the importance of building your credit score. Your credit score will help you take on good debt and leverage for future investments and purchases. And there's no better or easier way to build a good credit score than using your credit card. So always default to using your credit card for expenses wherever possible. But there's a big catch here, and this has something to do with being financially literate. You need to be responsible and pay your credit card bills on time, because credit card companies make money when you default or miss payments with steep credit interest rates and late payment charges. So they're hoping you screw up. Don't give them that win. And since we're on the topic of financial literacy, number 3, being financially illiterate. Financial literacy is something that's not even taught in school or even at home for that matter, but it's super important. And this becomes all the more important for immigrants moving to another country where just the move and setting your life up is super expensive. Humans are predisposed to learning about finance depending on what our family or peers do. So as we mature, we develop a unique relationship with money and how to handle money based on the people around us. But understanding and speaking the language of money is going to be the biggest make or break when it comes to your financial success. Also, financial literacy might seem straightforward, but it means numerous things. For instance, knowing the details of your income and streams of income, taxation, expenses, budgeting, saving, investing, inflation, trends on a personal level, using a credit and debt to your benefit, bang for your buck, quite literally, and the list goes on and on. We tend to ignore financial literacy because we're usually making very little money initially, and then eventually life just gets in the way. But just remember that the longer you put this off, the longer it's going to take for you to truly be financially successful. Number 4, making really bad career choices, especially as an immigrant. Immigrants normally take a hit when it comes to a role, pay, designation, etc. as part of their first job here. And there's a good reason for that too, considering Canadian recruiters are looking for people who have a good track record of working in Canada. But having said that, I don't think it's a good idea to comply just because you have to pay the bills here. And boy, aren't things expensive here in Canada. I landed a 6-figure job as my first job here in Canada, and it wasn't by luck or by accident. I personally think that people don't spend enough time contemplating what their short, mid, and long-term career goals are. If the job you pick right now does not align with your long-term vision, then it's better to nip it in the bud. If that requires you to do some part-time or minimum wage job to get there, so be it. But you need to be clear about the duration and the intent of these stints. And since we spend around a third of our days working, this decision will not only set you up for financial success, but will also compound over time. Another way to look at this is it's almost like you're starting over here in Canada. So if you've hated your work back home in India, or if you've been looking to change industries, then this is a good opportunity for you to explore another area that you would otherwise not have access to. So use that to your benefit. Finally, number 5, not having a savings and investment plan. I've noticed that people, especially immigrants, take way too long to plan out their savings. And I'm not even talking about investments here. Normally people would just end up saving what's left over at the end of the month, but with having to pay back a loan, send money back home, home or with expenses stacking up, usually people don't save much or end up living paycheck to paycheck. So it's super vital for you to introspect and retrospect here. What does that really mean? Well, the idea here is to understand why you're saving and set a goal, a weekly, monthly, or yearly goal that you can hope to achieve. And this would only be realistic if you look at what your personal financial trends are, as in how much are you earning, how much are you paying for rent, your loan, expenses, sending money back home, etc. Unfortunately, a savings account in Canada offers peanuts where the interest rates are really low. And I don't even need to stress on why inflation is a bitch. I mean, I'm sure you experience it firsthand here with just how expensive basic necessities like provisions and groceries have gotten. While simply saving money and keeping it in a bank account might help with liquidity, it isn't a good mid or long-term personal financial plan. And this is where the right investment plan comes in. I'm not getting into the nitty-gritty of savings and investments because that requires a dedicated playlist, but I think you get what I mean. All in all, spend some time and reflect on your life's numbers. And I do have a whole lot of content coming your way regarding savings and investments. So if you'd like to see more, hit that subscribe button. I had quite a few more items that I shortlisted for this video, and I'll release a part 2 if this video gets enough likes and comments. So if you'd like to see more, hit the like button and leave me a comment. Thanks for watching, and I'll see you on the next one.